It is the Year's End edition. Happy New Year's, all. My name's D7 here at Grok Trade, and it is the Year-End edition. I always love this video. Anyway, been doing this since 2004. I was the very first trader to do daily trading videos in the entire world. And now we're in 2017, and I'm here doing yet another video. It's so surreal to me. Matter of fact, this February is going to be my 19th year trading in the live markets. When I say trading, not investing, I'm talking looking at charts and making decisions in the market. Been doing that nearly 2 decades. I love trading. And I know if you're listening to this video, you do too. Anyway, we have a section that you will find very beneficial if you go to freeonlinetradingeducation.com. You'll notice I took away the pictures at the top, cleaned it up a little bit here. But if you click on more, you're going to see 2017 market close dates. Click on that. And this will give you all the dates that are closed for 2017. It's a quick and easy resource for you to come to see when the market will in fact be closed. I also add early closings. So there's a couple of those to be watching also. So next year, December 25th, Christmas, will be on a Monday. And well, let's get into the markets here. I'm only going to be looking at the weekly and monthly charts here on the markets. 2016 was a stellar year. We had a lot of ups and downs. You'll notice in 2016, at the beginning of 2016, we were dealing with China, and we thought China was going to have a meltdown as far as their economy is concerned. And that's why we had this big, large dip here on the weekly chart. We're looking at a weekly chart here. We come up, and if you remember, the Brexit took place. And then we had the election taking place here on this dip. And here we are now. The S&P 500 gained 9.5% for 2016. Not a bad rally, not stellar, but it's a pretty decent run. 9.5% is okay. But can you imagine only making 9.5% on your portfolio each and every year? I mean, to be quite frank, in our daily chat room, we try to do 10% gain on our risk. And that's on a daily basis. And that's, if you guys don't know what I'm talking about, at Grok Trade, if you click on Grok Star chat room right here, you'll know what I'm talking about. But there we're trying to do 10% a day on risk, right? So this is a 9.5 for the year. Anyway, I could jump on a soapbox here. Won't do it. I'll try not to at least. But the buy and hold strategy is not a strategy. Buy and hold does not work. I'm telling you, it is a fool's game. And I learned that after the technology pop in 2000 and learned it again in 2008 when the financial markets crashed. So here on the S&P 500, I have a sell order on the weekly chart now. Look at this. I added a sell order on the weekly chart. Sell order on the weekly. And this is something that the volume just was not great, but that's to be expected with the holiday season we're in right now. But we have to be watching very carefully of what's going to be happening here in the markets. If I go to the Dow was within 0.1% of hitting 20,000. We missed it. But we did gain 13.4% on the Dow for the year. It's a really, really, really good run in the markets here. Really good run in the markets. We had this rally, but I have a sell on it now. We do have a sell on the Dow on the weekly chart. If you look here on the MACD, we have a crossover with a negative tick on the histogram. You can see that right there. That is no good on the weekly chart. NASDAQ weekly chart gained a measly 7.5%. For the year, are you kidding me? 7.5% for an entire year. It's just horrible. And we're in a rising wedge. And that's a bearish formation. And we have a bearish divergence on the MACD. And we have a crossover on the MACD and the signal line. And we have a negative tick on the histogram. And I have a sell on it right now. Everything's lined up for sell on the tech stocks. I really believed last week that we broke out of a resistance area and we were going to start going higher. But closing out the year, bam, to the downside. Ouch, are you kidding? Just an about face. And that's what happened on NASDAQ tech stocks. Small caps, Russell's 2000 did the best. For 2016, gained nearly 20%, up 19.4%. And look at this. We pop up, boom, I have a buy up here. Buy. We busted through this resistance area, but then we pulled back. See that? Where is my node here? Right there. I'm going to take this, put it right here at that area now. This is just a nice little bull pullback. Nice little bull pullback. It kills me. It pains me to be able to add a sell signal. But I got one here. I got a sell signal here. But this thing could be setting up for a nice bull pullback, pull back a little bit more, and then bang, boom, to the upside. That could happen. So we're just not seeing a large drop here the last 3 weeks. It's just a nice soft retracement here on small caps. Very, very strong move here on the Russells. And I now want to go to the monthly chart on the S&P 500. Have it a buy last month. Boom, and we broke through resistance. However, we got up here to these higher levels and big money sold into that strength, bringing it back down on the S&P 500 monthly chart. What will happen next? I still have a buy signal on the monthly. I have a sell on the weekly. So let's see if we will continue to give back going into the brand new month starting off 2017. The diamonds, the Dow 30, I have a big warning sign because here's the deal. Big resistance line coming up, and we have the 20,000 mark. We got near it. People sold into that strength. This could be a resistance area, and we could start to drop. This is a monthly chart. I have a buy on it, but chances are a sell order on the monthly could be coming soon. NASDAQ monthly chart. Big rising wedge. Big bearish divergence on the monthly and the week. I mean, this thing's set up to drop. Warning sign. I already have a sell on it. I'm going to keep my sell on the monthly NASDAQ. Tech stocks on the monthly and weekly looking poor. Small caps monthly. We are at major resistance. I put a big warning up here. I don't have a sell signal on it yet. I can't do it based off of my rule sets. I still have my buy, but we're at this area of resistance. I fully expect this now to do that. That's what I think is going to happen next on the monthly chart on small caps. I'm going to go to the banks. The banks weekly chart is up roughly 35%, guys, for the year. That is huge. After the election, we had a boom on the largest sector of banks that's out there, or the index of banks that's out there. 470 banks are in this, and it's kept at the NASDAQ exchange. It is a big big index for banks, the largest, and that's up nearly 35% for 2016. That is a huge rally. But things that go up fast do drop fast. Guys, this could easily retrace and quickly. This is a weekly chart on the banks. Financials up also nicely, up 20.2%, right around there. Still have my buy on it on the weekly. High base. This is setting up to actually give another run to the upside. Looking pretty good on financials. Looking really well on financials and banks, guys. However, it's had a big run. It needs to pause. The financials are already pausing. Taking a breath here. That's healthy for the markets when it does that. U.S. dollar weekly chart up a measly 3.5%, but that's to be expected with the rally that we had in the markets. And I still have a buy on the U.S. dollar on the weekly chart. The buy is still intact. We do have a reversal pattern. We have what's called a bearish harami, so that is a danger sign. We could start to drop. If we do drop here on the U.S. dollar, that should make the market, stocks, gold and silver, everything buoyant. It should keep things nice and bullish. Now, crude oil. I read that crude oil, what was that? Up 45%. Only annual rise since 2013. And the largest annual gain in 7 years. And we're looking here at the index, USO, and we're just chopping around here. I have a buy on it. I'm going to keep my buy. We're at big time resistance on the weekly chart on crude oil. Gold up 9.4% for the year, and that's after a significant dive taking place. I mean, this is the worst weekly decline that we've seen right here in 12 years. That is a long, long time. But look at this. Boom! Buy signal on gold weekly. I have it here. It's ready to go higher, but it could be short-lived. But anyway, gold is a buy at this moment. I was telling my wife last night, we were heading off to meet up with some friends downtown, and I was talking how I'm in contact with a number of individuals that mine gold out of the ground. So this is raw gold, and so I'm able to get this near spot, which is awesome. So I'm looking to probably load up on gold, not necessarily on GLD, but on the actual physical product itself. Silver up 17.5% for the year, but a nasty little drop that we just talked about. But check this out. I have a sell on it. I do not have a buy on silver, not yet, but it could be. Look at the red lines only on the weekly chart. That is a falling wedge. Falling wedges can get really bullish, so I'm watching for that. This area coming across is a big time area of resistance. This thin line, so it needs to pop over that and stay over it for me to say this is a buy on silver weekly. If I look here at the VIX, this is the index. The fund that you can trade. It's just down, 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 and down. However, it looks like it's wanting to bounce. It looks like it's VIX or fear. In other words, if I'm talking about the VIX, VIX equals fear. If the fear looks like it's ready to increase, if that's so, the markets will drop. Let's look at the Vix Index. We've lost nearly 23% in 2016, which is really it confirms quite a bit the market rally that we received when we had such a drop here. We're only at 14 now on the VIX. 14 is a very low number, but I do have a buy on fear right now on the weekly chart. I do have a buy on fear. We got a bounce, and I have a buy on it. So that is bad when you have a lot of weekly indexes with sells and then the fear on a buy. We are set up to drop across the board in the markets. 2016. The question is, What did you learn in 2016 that you can apply in 2017 to help you in your trading? That's the philosophical question we need to be asking ourselves. Or what could we do differently going into 2017 that would help us in 2017 that we did not do in 2016? What did we fail to do in 2016 that we should have done? And there's a number of questions we should be asking ourselves. Now, you can quit the video right now if you'd like, and if so, all the best to you in 2017. Very excited for this year. We got plenty of stuff to learn and plenty of action to get to and a lot of money out there to make. If you will give me 2 minutes, I will introduce you to freeonlinetradingeducation.com and Grok Trade to show you a couple things you might not know about. Quickly, very quickly. I just said 2 minutes, so I'm going to make this very fast. At Free Online Trading Education. Now, the whole purpose that I made this site, and we've had it for a long, long time, whole purpose of this was to help individuals start to become educated in trading, taking baby steps in. So I thought, what type of resources could we put together that would best help individuals? So what I want to do is daily trading videos so nobody was left in the dark, that they had their finger on the pulse of the market at all times. Daily trading videos. Then we thought they need an ABC 1, 2, 3, very basic trading tutorial course that anybody could go through. And I put it together in such a way that if my grandmother wanted to learn how to trade, that my grandmother could go through these courses right here to learn how to trade. Then I said, well, they need to know education. They need to know the vernacular, the jargon. They need to know the definitions of the different patterns and indicators and oscillators and all that. And that's why we put together the chart school. Matter of fact, a lot of people, even you guys has been watching this a long, long time, you don't know this yet. But this is no ordinary stock chart school. There's a couple of them out there that are worthy to look at. But ours is just a step higher. And let me explain to you why. Here's why. If we were to take and pick just any of these, I'm just going to click on like falling wedge. You're going to get the definition of a falling wedge. You're going to get some background on it. But then, whoa, what was that? What was that? It was very weird. Let's do that again. Falling wedge. You're going to see here background and then practical uses here. But what's super cool is down here we give you a bunch of different formations to show you what these falling wedges look like. Okay, so and then you can print this out in the PDF form right here. You can print this out. Now let me go a step further. This should absolutely wow you. In the indicators and oscillators section, if we were to go to we can pick anyone we want to, but I'm going to go, let's do MACD, because I have that on mine. You'll see a picture of the MACD definition, the background of MACD, but practical use of the MACD, which is very helpful. But check this out. This is a live chart on the spider with the MACD in place. This is a live chart. You can type in any stock that you want to in here and look at the MACD to see how the MACD interacts with price action. This is a super, super cool. I'll put in Apple. Boom. Apple is in now. There's the MACD on Apple. And at the time of this video, we have a negative histogram on the daily chart. See that? And a crossover. So Apple is a sell territory right now. Apple is sell territory right now on the daily chart on Apple. And where did you get this? You did this at the chart school, and you went from the chart school, you went to indicators, and you picked MACD. Let's say you want to know about money flow. You click on money flow. You're going to learn all about money flow. You can print that out so you have it for your own records. And you get the spider with money flow right here with it. And you can see how the money flow indicator interacts with price action. This is pure genius, guys. I don't know of any other chart school that's this dynamic. All right, so I'm blowing sunshine up my own skirt here, but it is a very, very good chart school. And so we give a lot of free information, as I told you, the 2017 market close, and then some calls that I've made, they're recorded here, and you can look at those. All right, then the other thing we've put together, and let me wrap this up like right now. Grok trade. Now this is why we do it all, because it has to do with my story. I'm not going to sit and tell you my whole story, but what made me a successful trader was my mentor. It wasn't the books. It wasn't studying things off the internet. It wasn't all that, because all that was more data. More information wasn't what I needed. It wasn't more information. It was needing the right information, and that information is simulated. The mentoring is what did it. So that's why we don't develop a bunch of books. We don't do a lot of seminars, because it's not what helps people. However, what does help people is this: a trading mentor, because that's what helped me and helped Mark the Meerkat, who's our chief mentor here at Grok Trade, and Carolina, who helps us on the inside. She's actually a student of ours. She's a full-time day trader. So everybody, for the most part, who works at Grok Trade, except for my personal assistant, has been a student and has gone through our program. And proof is in the pudding. We also allow people to benefit from our screening. So we have a lot of screening to come up with stock picks. We do a bullish and bearish stock pick list here. So if you have a trouble finding the right stocks to either trade or to short, to go long or short, if you're having a problem with that, we think that we have the best one out there, because we give you both a long list and a short list, meaning that one to go bullish on or one to go bearish on. And they're fundamentally the best companies out there, period. And then we give you a video with this to show you the technical trades that we do on those. And those people who are day traders, there's a day trading chat room right here too. When the markets drop, so when you have the technology bubble pop, you have the financial market pop, or you have the elections or the Brexit or China, whatever the case, the market drops, you got to learn to know how to navigate your boat in those waters, those turbulent waters. We put together a hedging course, and that's right there. That hedging course helps people when the markets start to drop, where there's a lot of uncertainty, like right now, how to properly manage your portfolio so you don't take a big hit. So when the markets dive, your stocks don't do the same. So I hope I'm within my 2 minutes, but regardless, guys, you're the best. I sincerely want to say from just the bottom of my heart, thank you so much for being a faithful user, listener, customer of freeonlinetradingeducation.com or Grok Trade. I just ask that if you have not elevated yourself to mentoring, I'm telling you, that is the shortcut to successful trading. That is what you have to do in 2017. You failed to do it in 2016. You failed to do it in 2015, 2014. If your portfolio didn't do at least 9.5% for the year, then I highly suggest that you get properly mentored so you can trade with your eyes wide open. All right. You guys are the very best. Thank you so much. Share the video and like it if it deserves a like. Catch you later.